Greetings to all. I feel I'm compelled to make this recording due to the severe and widespread blow-up of the BHI Trust, which has affected thousands of people's lives and has caused chaos and havoc in the financial world in South Africa in the last week. I'm Viren Garach. I'm an auditor by training, a chartered accountant, who is also a registered investment manager and wealth manager. I must say at the outset that an authorized FSP would be legitimate, regulated, and safe as far as fraud and default goes. And thus, I feel for the thousands of people whose lives have changed in the last week who are hurting so badly. Why I'm making this recording is that beginning of this year, 3 clients who were newly onboarded onto our firm provided us statements on all their affairs, which is one of our requirements to full transparency regarding how you've invested your money. And we came across this particular BHI Trust statements. And I must say, immediately, I felt that there was something wrong. And I encourage my clients quite bluntly to say, listen, this doesn't look good. It seems like a pyramid scheme. Just doesn't feel right. The auditor instinct in me kicked in. And luckily for these 3 people, they, out of sheer paranoia and fear, withdrew their monies earlier this year and are not currently experiencing the pain by many, many others. On the other hand, I've also had others who have been affected, they have approached me, and I can say that the idea now is to see whether your financial situation still stacks up in terms of your objectives, in terms of your retirement and the capital and the type of lifestyle you required. And these calculations are still very important. I must say that you have to assume in these calculations that a fraction would be recoverable, or maybe none of it. And it's going to be a long process, a legal process, sequestration. It might take years before an outcome is delivered. And there are also costs that attach to all these processes, which will reduce the kitty, that if there's any kitty available for the ultimate investor, down to the investor who invested into this BHI Trust. Going forward, the lessons that I can give anybody who's listening to this regarding avoiding these type of situations in the future is to ensure that your returns make sense in terms of the general market. When I looked back in time now to returns that were purported to have been earned by the BHI Trust during the 2008 crisis, during the 2018 sell-off, during the 2020 COVID period, and it was quite obvious that those performances were not spectacular, like 30 or 40%, but delivering 13% in a year where most equity managers struggle to deliver a positive return should tell you that this person is either exceptional, is always winning against everybody, and any continuous exceptional performance is probably not real. There are great fund managers, investment managers that exist worldwide that are known to be at the top of their game. And I can tell you quite honestly, none of them beat their peers all the time, over every period, over every calendar period. That's simply not possible. And this is what this fund did. And yes, the ability to receive your money within one calendar's month, provided you put a notice before the 8th and so on and so on. The key word here is receive your money. The whole idea of this was that actually you're receiving somebody else's money. As long as there were new investors inflowing monies every month into this so-called product, your repurchase would be easily funded. And thus, the merry-go-round continued. Now, when do these things blow up? And why has it blown up now? I believe it's not a coincidence that as interest rate environment increases and you start to get more and more interest on your money, there's less compulsion for the normal person now to give money to a product because interest rates are high. If it's lying in your bank account and you're earning 8 or 9% in a money maximizer or whatever the bank product is called, you're less compelled to go and put it into a financial product. So the source of funding into these products start to dry up in high interest rate environment. On the other end of it, a person who's got the money in the product would say, well, I'm getting high interest rates from the bank. Let me now also repurchase and put it into my bank account in the meanwhile, because the interest rates are high. And when you have this double-edged sword, one end drying up and the other end an increasing request for repurchases, that's when the pawpaw hits the fan. And that is when these harebrained fraudulent schemes get shown up, because the money has dried up. The flow from Peter to pay Paul has dried up. So it's no coincidence that this has blown up in the peak of the interest rate cycle. I don't believe it's a coincidence. And thus, I still get down to it is that the ordinary investor out there you can do as much due diligence, look at the FSP number, look at the licensing, which all stacked up in this. I mean, this trust was supported by authorized FSPs. So it's not about that. It's about empowering yourself with just a little bit of knowledge to say that if markets have done -5, how could my investment do +5? It's really odd. How come consistently one person can beat every other manager out there in negative years? It's simply not possible. So benchmarking your portfolios on a regular basis against sector averages, the JSE, whether it's low, medium, high equity or full equity, is a critical reporting function that your wealth management firm or financial advisory firm needs to do. Benchmarking. The sector did so much in this profile of according to your risk profile and the investments you have, you've done this much and it's in line with the sector. That's your first line of defense. The second thing I would say is the transparency of the reporting. I looked at those BHI statements of the clients who approached me at the beginning of this year, and I said, is this all you get? And the answer was yes, these are the statements. They send it out quarterly. You can see there's a movement, there's a market movement. I said, from what I understand of ways and in terms of the transparency of what needs to be reported, this is unacceptable. This looks like reporting from the 1990s. The extent of the reporting in terms of the detail of the transactions that have happened on your portfolio, nobody looked at. All you saw was your beginning of the month balance, the so-called growth in your investment, the closing balance, and an arbitrary return earned for the quarter. And it really looked nonsensical to me. But that's what people accept. So I think transaction statements require a lot more systems to be generated and a system-generated return. And you should have by now online profiles into your investment portfolio so you can also check the detail of the transactions. So I think those are the basics. But what I do feel is that now, if you are affected by this scheme, are you a victim of this particular circumstance? You need to regather, relook at all your other assets and redo your calculations regarding your financial feasibility, regarding retirement, living expenses, and how you're going to now recover from the situation. And this means you do need an advisory firm to hold your hand and to assist you in this. Albeit you may have lost complete trust in the financial system, in financial services, one must bear in mind that this particular situation is an anomaly. There are millions of happy, satisfied customers who are getting great service, good products, good solid financial advice out there. And whilst the wounds may be raw at the moment, please do not cut yourself off from that sector where somebody can now reassess your situation and help you to recover from this. Besides that, I do believe that a complaint must be filed by yourself to the FSCA detailing all the records and the advice that you've received, and the FSCA must register your complaint so that if there is a order by the FSCA to compensate the investors, if the FSCA orders or the Ombudsman orders the firms that have been involved in this and in advising clients into this unregulated product, you may benefit from some of that. And that's critically important. And my number is 083 415 4860. My name is Viren Garach. I've been 30 years in this industry. I am trained originally as an auditor. I became an investment manager because this is my passion. I run a wealth management firm, and I'm prepared to assist and guide anybody who needs guidance regarding this. And even if you're not a victim of this and just listening to this particular podcast, I would say re-looking at all your investments and checking if there aren't any weaknesses is an important thing. Getting a second opinion maybe is also an important thing. Please contact me on 083 415 4860 by WhatsApping me. If you want my input, if you want any help, I will not charge for this. I will simply guide you. Thank you so much and good luck.